balance sheet. You guys were talking about that earlier. That's going to affect liquidity as well. You're having the runoff of the benefits from the tax bill. You're having savings that have already been pulled down by consumers. So where's the money coming from is a good question. But you flip that coin over. We had over 300 billion in new issuance in investment grade in the fixed income markets in the first quarter. June alone had almost 200 billion come in. So we're getting close to 17.5 trillion. And there is no lack of desire for people going in and demand in these markets, even when you're getting balance sheets that maybe aren't that strong, right? Free cash flows don't look great. It doesn't matter. They get investment grade ratings. People go in and they buy it up. So money is coming in. Maybe it's the rotation out of the tech component. Maybe it's some money sitting on the sides. Maybe it's money coming out of Bitcoin or some of those other areas of market, but the demand is there.
At what point will all this money sloshing around the system feed its way into more persistent inflation, even putting aside some of the disinflationary impulse from oil prices of late?
This is the key point I think that the Fed is watching. Look, before we had the war start earlier in the year, inflation was already getting sticky and people were trying to look and see how much is actually flowing down into the core components of what we're having, core goods and core services. That was already happening. And I think that's the reason the Fed is looking and maybe having still a more hawkish view. Yes, gas prices can come down, but what about the rest of that? Look at core and CPI and PPI over 5%, PCE. And okay, say you want to look at super core, right? That was the name of the game for such a long time for the Fed. It's super core. Well, that's up to 3.9%. And on a 3-month average, you're actually moving up on an annual basis close to 5% there. So I think there's a lot of concern with what's flowing down into the core components of our economy. That's what the Fed's going to be watching, and that's why they're remaining on hold and having that hawkish tilt that the market seems to be ignoring right now.
Victoria, what do you expect to hear from Kevin Wark today? For you, is this potentially a catalyst for market moves?
I'm not sure, Avery, that it's going to be a catalyst. I think everyone's going to be listening because we didn't get much, right, from the FOMC press conference or from the statement itself. So maybe they're going to be listening to see if he gives us little nuggets of information. I feel like he's going to be very prepared and have very kind of answers that are going to fit what he already spoke about at the FOMC. So I don't see him coming out and giving us a lot of new information. I think he'll be reiterating, but perhaps we get a little more information on the task forces, what those look like, what we're going to see in balance sheet, because look, inflation's driven by money supply, right? And when we've got a balance sheet that's affecting money supply, it's affecting what M2 growth looks like, it's affecting what overnight lending rates look like, all of that feeds in. Maybe we get a little bit of information there to help us see where rates go ahead.
Victoria, maybe. We hope so, at least. Thank you. Victoria Fernandez there of Crossmark Global Investments on Fed Chair Kevin Wark. There's a big spread right now between what I expect to hear and what I'd like to hear later on this morning at 9 a.m. Eastern Time.
Yeah, pretty low bar, I think, pretty much across at least our desks. But I think Bob Michael really summed it up yesterday.
What did Bob say?
He said, I want transparency. It's important to have transparency. He gave this beautiful speech about transparency and how important it is for markets. And then I said, well, from a market perspective, how does less transparency affect you? He's like, well, it's great because, there's much more dislocation. You can actually have a view and actually execute it. So as an active manager, it's actually really good. So there's a little bit of a discrepancy there too.
That's the market he wants. Equity futures right now, just about negative by 1/10% on the S&P 500. Counting you down to some economic data later this morning and a panel with the Fed Chair, Kevin Wark. Let's get you an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. An election upset in Colorado. 29-year-old Democratic Socialist Mila Quiros defeating a 15-term incumbent in a Denver congressional race. Quiros winning, highlighting the growing divide over the direction of the Democratic Party and the rising power of political progressives. The U.S. government lifting restrictions on foreign access to Anthropic's Fable 5 AI model. The move coming after Bloomberg reported Anthropic executives held private talks with Commerce Secretary Howard Lutnick about the model's safety parameters. In sports, Serena Williams playing her first single match in nearly 4 years at Wimbledon. The 23-time Grand Slam champion losing to 20-year-old Maya Joint of Australia in a 3-set defeat. Williams will play in a doubles match with her sister Venus later this week. And that is your Bloomberg brief. John.
Bonnie, thank you. Credit to Maya Joint for getting through that. Talk about one sounded cried, right? Everyone for Serena. And then you've got this young Australia He gets it done.
You know, at what point does that unleash the anger in somebody? I mean, it's seriously, I mean,
Oh, inside,
feel like
it's burning,
inside,
sure.
don't you have to like hate your opponent to really do well?
You kind of really respect them and hate them at the same time.
No, like, but don't you have to have that kind of vigor of like motivation?
Some people are motivated that way.
Yeah, it's like get the fight.
Not all though.
No, no.
Not everyone's like you, Lisa.
You think that every morning I wake up for a fight?
With the fire
Oh, yeah.
burning inside,
Who's going to beat me today?
ready to take on the Bulls. Up next on the program. Oh, that she's bullish now, right?
Yeah.
Kind of. Okay. Up next on the program, unlocking the future of AI.
We had a great meeting on AI. We had all the top people here, and it was a great meeting. And as you know, we're building tremendous numbers of plants, but we're number one in AI by a lot. He was here on time. I think he's going.
Let's go and find this morning. Admiral of Raymond James joins us next. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trades.
It's Bloomberg money.
This is Bloomberg Trades.
This is Wall Street. The balance of power.
We're watching Bloomberg Deal. Listen to Bloomberg this weekend. This is Bloomberg Television. Middle East and Africa, vibrant resources and high yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
No drama this morning. We've got stocks lower by, let's call it 1% on the S&P. On the Nasdaq, we're down by about a third. Heading into the day ahead looks like this. A sprinkle of economic data. The ISM at 10 a.m. at 8:15 ADP. That's the appetizer. Ahead of the main course tomorrow morning. The payrolls report just around the corner. Sandwiched in between. Kevin Walsh, Fed Chair, Central Portugal, 9 a.m. Eastern Time, alongside his peers from the ECB, the Bank of Canada, and of course, the Bank of England.
So will he say anything? Our expectations are fairly low. I'm actually kind of interested in what the ECB folks are going to say, how much they're going to lean into the same message that we've heard from the Fed and say, if he doesn't have to talk, we don't have to talk. So let's just talk about theory and, just to talk about the weather, because ultimately it is pretty hot. And let's talk about that. There is a sense here that they're trying to diminish their role as giving a sense of what's going to happen, because nobody really knows.
They want the market to do the work for them. And it is right now, 417 on 2. So the front end of the curve just about unchanged so far this morning. Let's talk about policy and technology under surveillance this morning, unlocking the future of AI.
We had a great meeting on AI. We had all the top people here, and it was a great meeting. And as you know, we're building tremendous numbers of plants, but AI, we're building the biggest in the world. We're number one in AI by a lot. He was here, going fine. I think he's going.
So here's the latest this morning. The US government removing foreign access curbs on Anthropic's Mythos and Fable 5 AI models, clearing them for wider distribution. Bloomberg's Tyler Kendall joins us now from Washington for more. Hey, Tyler.
Hey, John. Well, as Anthropic is now able to bring its most powerful AI tools back online, this has really underscored what has become the White House's willingness to intervene in the industry when there are safety concerns, because this marked the first major instance of the US government forcing a company to take offline one of its models after, in part, finding that some of the guardrails designed to prevent cyber attacks could be bypassed. Now, in a letter reviewed by Bloomberg News and sent to Anthropic yesterday, the U.S. Commerce Secretary Howard Lutnick said that after weeks of negotiations, Anthropic has pledged to, quote, proactively deter and address security risks associated with the models and agree to work on protocols and standards for future ones. Anthropic says access will be restored to users globally starting today, and that it hopes its collaboration with the government will help create a foundation for rules for the whole industry, as companies argue that they are currently dealing with what they say is an ad hoc regulatory framework here in Washington. Now, John, Capitol Hill has been flooded with more than 400 pieces of legislation aimed at regulating AI, but none seem to really be picking up steam, which is why many industry experts say that they think that some of the uncertainty will be eased around this once President Trump's executive order on AI is fully implemented, which includes asking these companies to give the government access to their models 30 days before public release.
Tyler, with the latest in Washington. Tyler, thank you. To build on this, Ed Mills of Raymond James with this to say: the removal of export restrictions on the Mythos and Fable models highlights a tension we anticipate will continue. How to balance promoting US AI tech globally while protecting national security. Ed joins us now for more. Ed, welcome. Can I add in this as well? Do you think there is a personal dimension to some of this as well with regards to Anthropic?
Yeah, Jonathan, absolutely. You had a big battle between the Pentagon and Anthropic. We had them labeled as a supply chain concern. And so it is not a terrible surprise that they were the first one labeled. But the tension that I was talking about there, John, is a tension that came up in every single meeting I had last week in Europe, which is, what are we doing? Are we flooding the zone, making sure US AI technology is the most available? Or are we concerned about national security? And if we're concerned about national security, can the rest of the world trust that they will have access to our models? Or do they have to go elsewhere? Do they have to go open source? And is that a win for China?
To build on Jonathan's point about the personal issue regarding Anthropic specifically, we always say in Washington, personnel is policy. Are they able to get a deal done? Because according to Wired, now the US government is dealing with Tom Brown and not Dario Lode.
That's a good question. I think they got a deal done because they've heard a lot of feedback that it's not 100% sure that you can use the export restrictions on a service. That this is usually a law that is going towards restricting physical, tangible items, Emery. We've done this over the last several years on semiconductors and semicap equipment. Does it really have the kind of regulatory infrastructure put in place to do this? If they got sued and it wasn't allowed to be done, that would be a problem. And that second issue, I think, is the bigger issue, is that if the world stops being able to rely on US AI technology, Trump saying the United States is winning AI by a lot, that is not something that we could continue to say if the world can't rely on that technology.
What does this mean with the DoD saying that no longer they could be working with this company and they're trying to find other models?
Well, I think that's almost a separate issue. I think that they are going to kind of continue to flesh out which models they're going to work with. I think that there is a whole host of infrastructure being put in place here in Washington, D.C. to make sure that folks can work on kind of how they interact with the Hill, how they interact with the administration. I think that the bigger issue really is that tension. How do we protect national security? How do we make it available to the world? How do we win? How do we make sure China doesn't get access or kind of get a leapfrog over us? We've lost to China in the past. The most recent example was the 5G rollout. We can't lose this to China again. This is kind of one of that big tensions that they are actively figuring out the rules as we speak. And so we're going to have ramp ups, ramp down, and change the policy on a fairly frequent basis here, Mary.
Does the message get muddied by the fact that the government is taking direct stakes in some of these companies? The idea that on one hand, there's a national security component. On the other hand, there's also a national prosperity and improve the government's coffers aspect of this. And there's a bailout factor. I mean, how do you understand that with the idea of money being put into equity companies?
Yeah, Lisa, when I was having these meetings with Raymond James clients last week in Europe, this was probably after the national security was, are we going to see the United States government take a stake in these companies? When I talked to folks kind of within the Trump administration and others around DC, the answer what I get back is, yeah, it's actually a fairly decent probability. What I hear that the industry is offering up is saying, let's not maybe have the United States government take a stake, but could they put some investments in the so-called Trump accounts that were created part of the tax bill last year, where there is a new account that created for individual, kind of newborn babies in the United States. So maybe give some equity to the people of the United States rather than the United States government owning a stake. But for a lot of investors, if there is a stake that goes into these companies, then those become maybe the too big to fail companies, and that is a big positive. Or a lot of investors I've talked to say, hey, that might be part of the reason why we might choose X or Y as a winner versus A or B as the winner.
So hold on a second. You're saying that if someone has a baby today, that their baby can get a stake in Anthropic?
Well, it's part of the Trump account. So if you have a child over the next 5 years, there's going to be an account that is created. There's a seed money of $1,000 that's in there. And there's a lot of different individuals, like Michael Dell has said on certain accounts that he's going to donate money. Is the kind of next step here is that certain IPOs are going to set aside some money for those Trump accounts as a way of avoiding those equity stakes by the United States government. That's what they're actually pushing. There's a conversation about other companies as well doing that.
Just before you go, I've got about a minute left. You say we're in Europe, you mentioned that a few times. How great is the divide between what we're talking about in the US right now and what the Europeans are doing?
I don't think it's all that great. I think I'm mostly with equity investors in U.S. Equity, so they are very focused on all of these U.S. policies. They want to know what's the outcome of the midterm elections. They want to understand kind of how kind of the AI race is going to kind of play out. They want to understand kind of the future of the Fed. So a lot of the conversations I have in D.C. and kind of throughout the United States is the same that I have in London or Paris.
And Mills, Raymond James, thank you. The great divide right now comes down to one thing, I guess: how it money into this thing for America in a way that Europe really is not.
On every level, whether it's coming from government or whether it's coming more so, frankly, from investors who believe in it, want to put the money to work. I mean, you keep saying, when is the money going to run out? And the answer is not happening anytime soon. And how much more is the money going to continuously flow if we do some sort of seed to Trump accounts or seed to a sovereign wealth fund?
Coming up on the program, we'll catch up with Stathis Kalaidis of JP Morgan on the financing boom helping drive the AI data center build out. Plus, your hire has got your morning movers. Bloom Energy expanding its partnership with Brookfield. That stock is higher by 7%.
world's most powerful investors don't ring a bell, but quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power, billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. Key investors, top executives, global innovators join me for in-depth conversations with the biggest newsmakers on the day's top stories. Sites with husband on it. Only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg. Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Yep, about 2 hours away. The cash open just around the corner. Equity futures right now in the S&P 500, down just a tenth of 1%. We're down by 0.16 on the S&P. On the Nasdaq, we're down by 0.4%. The S&P with a monster quarterly gain, the biggest we've seen going back to 2020 for chip stocks, the biggest quarterly gain on record. In the bond market, check it out. Yields reset higher in the last 24 hours. Data was good. Beth Hammock at the Cleveland Fed, hawkish once again. Twos at 417. This came from Kevin Hassett, the NEC director, speaking to an American broadcaster a little bit earlier this morning, saying it would be a mistake to raise interest rates. Up until recently, the administration collectively have been giving Kevin Walsh a little bit of space. That isn't giving the Fed chair a little bit of space with those comments this morning.
And there's a little bit of daylight between what Kevin Hassett has said and Treasury Secretary Scott Bessent, or who's come out and said, look, they do what they got to do. And so you can understand why they remain on hold. He's not saying to cut rates, so there's at least that. But is this the beginning of maybe some rhetoric coming to light? And he's making Kevin Warren's job a little bit harder with this comment. I'm concerned with Jay Powell staying there. There's a majority of people over at the Fed that are not necessarily going to be voting because they're patriotic, but rather because they want to get Trump. Basically saying that some people are at the Federal Reserve and making monetary policy decisions based off how they feel about the President of the United States. That's going very far for the representative of the White House when it comes to economic policy.
That feels like a stretch. Because if you can accuse the leadership of the Federal Reserve of anything, and Chair Powell specifically in his chairmanship, of being reckless, it would be recklessly dovish, not recklessly hawkish.
Yes.
Cutting interest rates 3 times last year, cutting interest rates 3 times the year before that, with inflation above target. It's difficult to sit here and say that guy's been a hawk.
I look at this and I say, this is noise to try to complicate the situation so that whatever they do, you can still have someone to scream at the end of the day, because ultimately you can have someone to blame and say they did the wrong thing. If you have an issue, go talk to him. Go talk to Joe at Sunoco and go talk to Jay over at the Fed.
Doesn't help this guy running this Fed. Acknowledging that Walsh has to herd some cats and has a difficult job. With comments like that, the job gets a little bit harder. 2 hours away from the open and bound. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Chip stocks just finished their best quarter ever, but Michael Burry is not buying the bullishness. He says the stock semiconductor index is its most is as stretched as it was during the dot-com bubble, pointing to its biggest extension above its 200-day moving average since 2000 and a price-to-sales ratio of more than 16 times. These are concerns we've heard before from investors, but Burry putting real money behind it, shorting a semiconductor ETF. So we are seeing names like SanDisk and Micron falling in the pre-market. Meanwhile, Bloom Energy is surging. That stock up 7.5% in the pre-market after announcing it is expanding its AI data center partnership with Brookfield, increasing a financing framework for AI data centers from $5 to $25 billion. And analysts are saying that this just underscores stronger than expected demand for Bloom Energy's fuel cell technology. The stock with this gain is up 250% year to date. And we end on Nike. Those shares down 36% year to date and are falling 2% in the pre-market after investors were looking for a turnaround here and did not get one, with management saying that they expect to slow down in the coming quarter, overshadowing what were better than expected results. But the World Cup is not helping Nike here. Early data does show that its ads have been stronger than Adidas and that its merchandise has been selling better, but it's not showing up in the results. John?
They don't have the stock. Nike this morning, the stock is down by 2%. Howard, thank you, but they don't have the stock. Try and buy the Brazil jersey right now. Try and buy the Team USA jersey right now. They've run out of stock.
I have to admit I haven't tried, but I will try.
It's not available.
Yeah,
Fine.
I'll explain that to the kids.
Have they been asking for the jersey?
Actually, I just got a request this morning.
Oh, did you really?
Yeah.
For which one?
For the younger one, and I was like,
Which team?
USA. Yeah, and I honestly, I can say I'm sorry if there's none available.
French
Thank
team
you.
has a beautiful jersey. I was going to buy on fashion alone.
Yeah,
French team.
I think it's the US one looks a little bit like Where's Waldo, but I'm very much for the game.
I've heard someone say the same thing about that as well.
No, I like Where's Waldo.
And not good if you're not trim, like super.
Yeah, I mean,
Because of the strong.
yeah.
James Corden was talking about that. James Corden problems, of course. Anyway, equity futures. He'd acknowledged that. Equity futures right now on the S&P slightly negative, too far. No, he said that himself. I think he said that himself. Oh my God. He said that himself.
Okay. It's a quote. It's a direct quote then. You're citing the source. I'm gonna go look up this video now.
You can. On our radar this morning, the yen holding at its weakest level against the dollar since 1986. Japan's currency chief telling Bloomberg that the country maintained US support, suggesting intervention is an effective strategy. Get it together. Come on. Anthropic, winning approval from the Trump administration. The US removing foreign access restrictions on its Mythos and Fable AI models. Anthropic says it will begin restoring access today and increase collaboration with the US government. And finally, Microsoft preparing another round of job cuts. Business Insider reporting the layoffs will impact thousands of roles, including those in its sales, consulting, and Xbox divisions. The cuts coming as Microsoft reins in costs and ramps up AI spending.
It comes after a whole host of other thousands and thousands of cuts in the tech sector. The key question for a lot of people in the labor market is the tech sector the first, the tip of the iceberg in terms of cutting staff to support some of the CapEx, or is it uniquely positioned to be disrupted, considering that there is a much more direct crossover to the programming and the engineering to some of these more automated tasks through AI? And ultimately, we won't know the answer. That said, this is a smaller round of cuts than in the past for Microsoft, about 2.5%. So going forward, I think that'll be interesting. Well, in May, they also laid off a number of individuals, and then an executive had told Business Insider that they wanted to reduce the number of middle managers and increase the ratio of coders to non-coders on project to grow its, quote, span of control, or basically less people reporting to less management. So basically try to get out of that middle layer, become more leaner. And as Lisa says, we're seeing this across the entire technology space.
Tough month for Microsoft last month, that's for sure, for that particular individual name. Let's talk about the boom we're seeing, not just on the equity side, but the debt side too. US investment grade sales setting a fresh record in June, issuance surpassing $175 billion, led by mega offerings from NVIDIA, SpaceX. Kathis Karanikolidis, the head of North America Leveraged Finance at JP Morgan, writing, we can see a blue sky scenario due to an AI-driven super cycle, strong earnings, a resilient economy, and labour market, as well as easing Stathis joins us now from North. Stathis, good morning, sir. It's good to see you.
Good morning. It's great to be here. It's great to see you.
Let's talk about these tremendous financing needs. Can you frame for us just how much capital needs to be raised in this country?
It is a generational opportunity. We've never seen anything like this before. And it seems to me that the need will continue for years to come. The majority of the capital is being raised in the investment grade market because these companies are investment grade quality. We also see about, in high yield, for instance, issuance year to date has been 190 billion, of which 40% is for AI related data center financings. And we can see that to accelerate into 26, 27, 28. We don't see that abating anytime soon.
We're seeing certain companies get creative, Alphabet looking at other countries, other currencies. Is that a sign of reaching the limits of how much we can borrow, or is there a lot more runway than people believe?
I believe there's a lot more runway than people necessarily believe. It's just that you need to tap any market possible. It's not so much capacity, it's capacity and making sure you get the best terms possible and the best cost of capital. Somebody's going to be project financed down at the asset level, some at the corporate level, and you tap multiple markets. We saw investment grade bonds, equities, and anything in between.
So can you talk about how this has changed your job? I mean, do people, 3 years ago, somebody might have come to you and said, I want to raise $400 million in high yield bonds, help me out. Today, does somebody come to you and say, I want to raise $30 billion? What should I do?
It's a very good question. And there's been a significant evolution of the way we think and the way our clients think and the clients' needs. When I started this job 25 years ago, it was very specific. You sort of were focused on individual products. You either sold a traditional loan to banks, you sold a high yield bond or a syndicated loan to the institutional market in term loan B form. Now, as the needs have evolved, what ends up happening is clients come to us, we encourage this, and we ask them, what are your priorities? What are your needs? What risks are you trying to mitigate? And then we develop a solution that many times includes more than one product. It's not just debt. It could be debt, it could be pref, structured equity, common equity, and many different types of products. And it's our job to be able to meet those needs. And if we don't have a product that we can use immediately, it's our job to create one. And that's been the evolution of capital formation, capital needs, the way we think of the market. And I believe as a firm, we're in the forefront of this, but it just follows what the client needs are.
It seems like so far this year, the investment grade market and biggest tech companies kind of suck the oxygen out of the room. They're the ones that are raising all the money. They're the ones that are coming out, dominating the market. In the leverage finance space, you aren't seeing issuance reach record levels. It's been a good year, but not necessarily a record year. At what point will it be the year of high yield? Because this year seems to be the year of investment grade. Everybody seems to be tapping that market. When does that shift?
I think it's the year, it's 27, 28. But talk about the high yield market for a second. The issuance is up about a third compared to the year prior. And as I mentioned, 40% of all that has been AI driven. And so we are participating, but not as much the headlines as the investment grade market. But I do think this will accelerate because M&A volume is financed in our market have been quite low the last several years. And that's going to accelerate into 27 and 28. And therefore, you have a combination of more AI-driven financing needs combined with a much more robust M&A environment.
That's a lot of supply that we might see. There is a financial stability concern that's on the horizon, and you might have heard from Tobias Adrian over the IMF in the last 24 hours, and they're focused on a perceived mismatch potentially between the duration of the debt and how quickly the assets that underpin a lot of this depreciate. And I can read the quote directly, and I'd love your thoughts on this. What is quite worrisome from a financial stability perspective is that the major tech firms are starting to leverage up themselves. There's a potential maturity mismatch in between the duration of the physical assets and the duration of the debt. How are you thinking about that particular tension, if there is one?
It's a legitimate concern, but I think the markets will overcome it. And they'll be able to accept the refinance risk and move on. I think with the early innings of this, it's hard to say.
When you say the early innings, what does that really mean? Just play that out for me.
Yeah, in terms of
It's like a 10-year theme. What is this?
I think it's not necessarily a 10-year theme, but it's not a 2-year theme either. I think we'll play out over the next 5 years or so.
Stathis, it's good to see you. Lots to think about. Thank you. Stathis Chronicleitis there of JP Morgan. The IMF's focused on it. The Bank of International Settlements increasingly focused on it too. Tiff Macklem, the Bank of Canada, focused on something similar as well. I wonder if this comes up later this morning.
Yeah, especially considering the fact that this has been sort of the national champion of the U.S. and helping support the economy. And Kevin Warsh has talked about how it's going to be potentially disinflationary. What I find interesting is the different products have different maturities. That if you look at the investment grade maturities, we're looking at 30-year Mars debt. When I talk about SpaceX,
Sure.
people are getting a little queasy on that. But there's a much lower maturity in high yield. So it starts to really raise the question, where is the risk? Is it higher leverage or is it the number of years until you've got to refinance it or until you've got to, until you get your money back? And ultimately, these are the types of calculuses that people are doing in the market.
Some of the themes at play right now. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Fed Chair Kevin Warsh making his first global appearance in his new role. Warsh joining global central bank leaders from the ECB, the BOE, the Bank of Canada, and others in Sintra, Portugal. Fed Chair speaking at 9 a.m. Eastern, and you can watch it live on Bloomberg TV and on your terminal, of course, at Live Go. President Donald Trump reporting yearly earnings of at least $1.4 billion from crypto and meme coin related businesses. The president also earning at least $26 million from new real estate ventures overseas. In addition to his crypto earnings, President Trump also gaining access to some of the country's biggest sporting events. According to his disclosures, Trump received 10 tickets to the US Open, the World Cup final, and Super Bowl 59. And 30 of those tickets will be valued at $90,000. And that is your Bloomberg brief, John.
Vonnie, thank you. I would challenge any of you to find 10 really great tickets to the World Cup final for $15,000. Seriously.
10 really good tickets.
10 tickets, $15,000. Is that what they are?
I think they're much higher.
In total? Is that what we just priced them though for the president?
Right. He's getting
Right.
very.
If you went into the market right now and tried to buy 10 tickets for the World Cup final, you'd be lucky if you got one for 15K.
Yeah, no, 100%. He got obviously a presidential deal.
Nice race.
Yeah.
Cool down. Okay. Up next on the program, a deal in jeopardy.
USMCA did one thing that I loved. After 6 years, it comes up for renewal. I don't know that I'm going to renew it.
With the deadline's out, Aaron McLaughlin of the conference board joins us next.
Anything you do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving their problem as opposed to maybe a nice to have solution in Africa, that might actually offset it, where you're solving something that people really absolutely need and can't live without in a way that then that's a lot less risky. So again, the need encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Kicking off Q3, where did Q2 go? Second half of trading begins with equity futures negative 0.2% on the S&P. We're down by 0.4 on the Nasdaq 100. On the Russell, flying high, record highs. On the Russell 2000, a 21% gain through Q2, which is just unreal. That's the equity picture this morning in the bond market, 2s, 10s, and 30s. Let's talk about the front end of the curve. And let's talk about the National Economic Council Director, Kevin Hassett-Gilmore's with this quote this morning. It would be a mistake. Interest rates. Kevin Walsh about to go on the stage in about an hour and 10 minutes' time. That would be the first quote, wouldn't it?
Well, and the expectation right now in markets is that he's going to have a hawkish tone. So awkward. If you're saying all of a sudden the Council of Economic Director, Economic Council Director is saying it's probably keep rates on hold. Ultimately, there are two ways to read this. On one hand, you could read this as a Kevin Hassett issue and just talking about trying to please what President Trump would like to see. On the other hand, you could see this as a Kevin Walsh being able to newly assert his independence by saying we'll do whatever we want without having to commit to anything or say anything about the reaction function. So does he give him a pass to sort of talk about a controversial point that has no ramification? I mean, honestly, listening and looking at these quotes, it makes me feel like She's a little bitter that he didn't get the top job, now going after the president's pick and making it very political, saying he's concerned that someone like Jay Powell staying around. Now that might play to the president's favor, but Jonathan, to your point, Jay Powell's a dove. He's always been a dove, and he's still there.
Yeah, and some people think out of all the dots in the dot plot, the dot that isn't calling for a hike this year is probably the former Fed chair and current Fed Governor Jay Powell.
Yeah, I wonder how much the market cares about something like this, like rhetoric like this, because right now the market is screaming that this Fed has reasserted its independence and doesn't seem concerned at all about the rhetoric. I wonder at what point it actually starts to damage things in any way, right? Because we've seen real yield curve flattening. Does that reverse if you start to hear more jawboning from the White House, or is it viewed as just irrelevant and just looking for a scapegoat?
I would suggest the markets look through all of this, not just this, but everything over the last several years as well. When everyone was freaking out about central bank independence and the legitimate concerns they had about the effort coming from the White House, understand that. But I was looking to one thing, market expectations. I didn't see financial markets become untethered, worried about the erosion of central bank independence. I didn't see that at all. Market looked through that, and the market to some extent will look through this. But what I will say is that this is making the new guy's job a lot harder than it needs to be. He's got the support of so many establishment figures. Now, this is not a dig at Mark Carney, a man who I respect, but the most establishment elite guy you can think of, the current Canadian Prime Minister, former Bank of England governor, endorsed Kevin Walsh. It's about as establishment as you can get the support this guy's got from all of these people.
I'd watch what Scott Bessent says more than Kevin Hassett. Kevin Hassett might be closer to President Trump. Scott Bessent might be looking at the long end of the Treasury curve and saying, actually, this isn't so bad.
It's a pretty orthodox pick, generic Republican pick to be Fed chair. It's been in the running for like a decade plus, hasn't he?
I mean, you look
Here he is.
there you go. Right there.
Central casting, as the president said.
Exactly.
Yeah, okay. I just about this morning. A deal in jeopardy.
I love it. After 6 years, it comes up for renewal. I don't know that I'm going to renew it because, to be honest with you, we don't need anything that Canada has. We don't need anything that Mexico has, but they need everything that we have.
So here's the latest this morning. The US, Mexico, and Canada set to blow past today's deadline to renew the USMCA trade deal. Aaron McLaughlin of the Conference Board writing, the agreement is important to all three economies, but especially for Canada and Mexico, who are so heavily trade dependent on the US. Aaron joins us now for more. Aaron, good morning. Good to see you.
Good morning.
Deadline's here. Deadline's about
Here.
When's it going to be in a few weeks' time, a few months' time?
Yes. So the term deadline seems to be soft in this case. Seems like it might be a deadline for the talks to begin versus the talks to actually come to an end. We've seen formal discussions start between the US and Mexico, but what concerns me and concerns others is that we've seen no formal talks start or be scheduled between the US and Canada.
What is the dispute right now that wasn't settled with the renegotiation of NAFTA all those years ago?
Well, there's a myriad of sort of, I would say, low to medium issues, most of which could be resolved. And Canada and Mexico have come forward and said, we want renewal. We want to renew this for 16 years through 2036 when it ends. Some of the things that are sort of up for discussion are obviously the big thing is the Section 232 tariffs on things like steel and aluminum. But we don't think those are going away. But the other things are sort of related to rules of origin, some labor discussions, some environmental discussions. But it is a bit of a mystery why there's no Canadian-US discussions.
When it comes to this potential timeline, who do you think is dragging their feet the most? Is it the United States?
It is the US. The US is essentially leading the scheduling and the discussions. And so what seems to be taking place is that we're going to replace the trilateral agreement, perhaps with a series of bilateral agreements. And that's surprising. I think most folks that watch this stuff closely may not have thought that that would really take place. The administration does not need congressional approval to really renew it or not renew it. It's more of a joint check-in. To actually withdraw, you have to state your withdrawal and you get to withdraw after 6 months. But this really triggers sort of an annual discussion, which unfortunately will lead to uncertainty for businesses.
So this is the start potentially of the end of USMCA, which was Trump's deal under Trump 1.
It is, yes. Now, previously under NAFTA, there was no sort of mechanism for review. So of course, the first Trump administration probably did think they would be in office in 6 years. So they didn't know that they would be the ones sort of renewing it or having the joint discussions. However, the mechanism is there in order for the three nations to sort of get together and have this conversation. But again, we're not seeing really a trilateral conversation.
Been any data points or studies that show dampened economic activity as a result of uncertainty having to do with tariff policy and just sort of international relations?
There is. Well, specifically to North American trade, I was very, very surprised. I did an analysis of starting with liberation day that first year and then what the year before looked like. And every single of the top 15 commodities that we trade between the three countries is down except for three. And they're all related to the AI boom in data centers, which I could not believe. Year over year, computer and electronic trade is up 25%. So my big sort of reason that I think the administration should really be encouraging trilateral and productive discussions is this: if we do not have an agreement, this will lend uncertainty and potentially higher prices for building our data centers and for building out our digital infrastructure.
How does this fit with the down row doctrine? The idea of getting further into Latin America. I mean, Mexico is one of the biggest suppliers. There are a lot of resources there. And then you go further down. I mean, how does this play into solidifying some relationship and competing with China there?
Well, it's really interesting because obviously the three countries are each other's largest trading partners in general, but China sneaks in there, as does Taiwan and some other Asian economies, especially from Mexico. Mexico has become a really important sort of labor staging area for a lot of sort of the semiconductor, the computer components, the data centers. So that's really, really important. And I can definitely see why there would need to be some further discussions around labor rates and other sort of things to keep us all competitive. But definitely that sort of third party treatment of other countries, whether it's China or others in Latin America, is definitely on the table with the administration as far as how Canada and Mexico approach those. But Canada and Mexico have stated essentially that they're willing to do almost anything to keep this going.
I can't think of many things that we want to talk about less outside of the Strait of Hormuz, and that's another spat about trade,
Yes.
right? We're going to have to do this again.
How do you analyze something that's unanalyzable? How do you deal with uncertainty? It is not good for business. It isn't good for our brains because ultimately people can't get a hold of what paradigm you're in. It's hard enough when there's a technological paradigm shift. Then you put on top of it one policy shift after another, and it just becomes impossible. It becomes paralyzing.
I will never understand the attack on Canada. I will just never get my head around it. We could have had a North American powerhouse. There could have been a conservative prime minister, Pierre Poilievre, who must be so disappointed by the attack as well because he was up in the polls at one point by 20 points, I think, in one poll before Carney came in. It's just crazy. I don't understand it.
Is it policy or is it personality?
Don't know. I really don't know.
Yeah.
It just didn't make sense at the time and doesn't really make too much sense now either. Erin, good to see you. Thank you. Erin McLaughlin of the Conference Board. The third hour of Bloomberg Surveillance is up next.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh, you think she owned the place?
23andMe, I think, is so incredibly valuable. We're coming back. It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you? I don't think anybody can trust any company or entity completely with any of it.
Experimental. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands. The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. Next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily, from the magazine that helps global leaders stay ahead. Conversation around your company, bringing you insight on the people, companies, and trends shaping today's complex economy.
Winning very big gains.
Premium.
Plus global business, finance, and tech news as it happens.
Floodgates of innovation are going to open up.
Can't say passion. You are it.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Things are still remarkably good.
The overall sentiment in AI is still positive.
The hyperscalers, that's what's funding the AI revolution.
We're still early in this AI super cycle.
You can't name a sovereign that's not interested in investing in AI.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures on the S&P negative 0.2%. On the Nasdaq, we're down by 0.5 on the quarter. Last quarter, absolutely flying on the Russell, higher by more than 20% this morning, down by 0.4. In the bond market, 2s, 10s, 30s, talked lots about this already this morning. Data so far this week, pretty good. Firming up rate hike expectations again, 420, just about at the front end of the curve on 2s, 10s at around 450. Heading into this later this morning, ADP data at 8:15, more data at 10 a.m. the ISM. But the main event is at 9 a.m. Eastern time. Your Fed chair, Kevin Walsh in Central Portugal.
We've priced in rate hikes after the FOMC meeting when there clearly was a hawkish tone, and you've heard some hawkish rhetoric from a number of central bankers since that meeting, whether it's Neil Kashkari or Beth Hammack. You've heard a bit of a dovish tone from John Williams. So there's been some disparate decisions across the board. If you thought we weren't going to get a lot of communication, we still are getting a lot of communication, just not today. Does Kevin Walsh come out with the same kind of hawkish tone that he represented from the committee, or does he push back of it, or does he really steer clear altogether? I don't know how he steers clear of this altogether, but perhaps he'll get creative because the bar is very low.
Well, we heard from the second Kevin a little bit earlier on this morning, the NEC director out of the White House saying it would be a mistake to raise interest rates, slightly off script given what we've heard recently from the White House.
Right. This is very different than we heard from the Treasury Secretary just last week when he was speaking in New York. You can bet it's not going to be Kevin Walsh's fault, but he has got to herd some cats over there, and it is a really difficult job. That is what we heard from Kevin Hassett, the president's top economist. Not only that, really throwing some politics into the mix, saying he's concerned with Jay Powell staying. There's a majority of people that are voting based on whether or not they like the president of the United States, Donald Trump, not based off economic data.
Yeah, look, we've talked about this. It's worth going over again. That quote makes no sense. It has little place in this conversation right now in any way, shape, or form. And that's validated by how the Fed reacted at the end of last year by cutting interest rates three times, even though inflation was above target. It's difficult to make the case right now that there are individuals on the committee that are voting on politics. I don't see that. I'm not sure he can make that statement this morning.
The market's saying that they don't believe that. I mean, that's the clear takeaway over the past couple of weeks is that this market does believe in an independent Fed because you've seen inflation expectations come down. If you do have an independent Fed, you believe they will act credibly to bring inflation down when necessary, even if it does potentially bring back some growth. This is the reason why, as the Supreme Court said, it was important to have an independent Fed, even if other agencies are under the purview of the executive branch. Look, markets are not getting worried about this. Does the White House give them something to worry about? We shall see. Is this a Kevin Hassett issue? Is this a President Trump issue? Is this just commentary to try to stir up drama ahead of this speech?
Do we get more drama? Not ahead of the speech, but ahead of the midterms later this year. Coming up this hour, we'll catch up with Jim Bianco of Bianco Research as markets look to kick off the third quarter on solid footing. Andrew Holmhorst of Citi calling for a street low 25K in tomorrow's payrolls report. And the Nissan CEO, Ivan Espinosa, on the next generation of AI-powered driving. We begin this hour with stocks pulling back following a strong close to the first half of the year. Jim Bianco, Bianco Research, looking ahead to Fed Chair Kevin Warsh taking the stage, writing, Warsh says he wants the markets to react to the data. I would argue they are, and are telling this Fed they should be hiking interest rates. Joining us now is Jim Bianco of Bianco Research. Jim, welcome to the program, sir. It's good to catch up with you, Jim. Let's talk about whether you believe this market is calling for hikes. You say yes, and whether you think this Fed needs to validate that call.
Oh, yes, I think the market is calling for hikes. You could see it across the board, whether you're talking about short-term interest rates, about 4.10 on the 10-year, on the 2-year note, excuse me, or if you look at the Fed Fund futures market, which is pricing 80% chance that they'll raise rates at least once between now and September. So the market is solidly in that camp. And I might add, Kevin Hassett saying it would be a mistake for the Fed to raise rates. He shouldn't be talking to Kevin Warsh. He should be talking to the markets. If he wants to make the case that it's a mistake, then let's see the 2-year note respond by falling well below 4%. And then we can have a conversation about whether or not the Fed should be hiking rates.
Jim, if they do hike interest rates and they do it sooner than people anticipate, do you think this market can digest that? Is there enough of a bullish anchor right now to this equity market specifically to stand up to it?
I think there is for two reasons. One, I've always argued that interest rates are a little bit more nuanced than President Trump's argument, which is effectively down is always good for whatever reason and up is always bad for whatever reason. And that nuance is they should approximate a fair value. Well, if the economy is doing well and inflation's a little bit sticky, that fair value for interest rates is drifting higher, and they should too. And if that's what they're doing, and I think that's what they are doing, then it should be okay for the rest of the economy and the financial markets right now. So I don't see it as being a catastrophic problem if interest rates start to move higher.
Right now, there's a feeling, Jim, that this is rhetoric, but they're not actually going to go ahead with a rate hike. That seems to be what everyone who comes on this show seems to indicate, at least people who are saying that they're bullish the broadening out theme in equities. Why do you disagree? So you believe that they will hike rates. What do you think will drive them to, even with the disinflation that we're seeing from oil prices?
Well, it's more than just a disinflation because we've got higher core inflation right now, well above 3%. I might also add, we're in a global rate hiking cycle. Japan has raised rates 5 times. Australia has raised rates 3 times. Last month, the ECB raised rates. The Bank of England and the Bank of New Zealand are expected to raise rates. Colombia raised rates yesterday. So we are seeing inflation elevated all over the place. The ECB numbers came out today, 2.8%. Those might be a little bit lower than expectations, but they're unacceptably high for a single mandate central bank that has 2%. Inflation is sticky everywhere. The fair value of interest rates is moving up. They need to kind of follow that higher as well, I think. If the Fed were to defy that, I fear if the Fed were to defy that, they'll produce higher interest rates faster. There's an old adage in the bond market that as a bond investor, I can stop panicking when the central bank starts panicking. And if they're not going to be serious about inflation, then a lot of bond investors might not be serious about owning bonds. And that's the other thing that they have to be careful of.
Jim, is there anything in particular that you're expecting to see in some of the labor market metrics that we're going to be getting that supports this idea of stickier inflation that has legs? Because what some people push back on is wages haven't kept up in terms of how much they've expanded. So you can't see an ongoing increase in prices, especially with the savings rate going down so much among consumers. What are you looking for to rebut that thesis?
Well, I think you have to, to pivot to the labor supply argument. I know we all are of this mode because we have been for decades to focus on the labor market and to focus on, what the numbers say. And we have this mental model in our head that somewhere around 150,000 jobs is about what we should be producing every month. But even Jay Powell was saying right before his term ended that that number might be close to zero. And that even a number as low as 25 or 50,000 jobs might be enough. It might be okay for this economy, and that does not require support from the Federal Reserve. And I also would add, I would hope that Kevin Warsh would address something that he had in his first press conference, and that he called the payroll report, an echo of the past that's only good on the third revision, which comes 18 months later. Sounds like he's not even going to be paying attention to this report. So what does he pay attention to, and what should we be paying attention to?
Jim, if you think the Federal Reserve is going to hike interest rates, when we heard from Kevin Haslett earlier this morning, talking about the fact that he doesn't think there should be a rate hike, and also saying that it could be quite political. Is this the appetizer to potentially a dust up between this White House and their brand new pick at the Fed?
I don't know if it's going to be a dust up between him and Warsh, but I'll go back to the Lisa Cook case that was decided 2 days ago. And that gave him a path, even though it's a difficult one, to remove Federal Reserve governors. And he said he's going to test that path with Lisa Cook. So the dust up could very well be not necessarily with Warsh, but it might be with some of the Federal Reserve governors. And I would, in addition to adding Cook onto that name, Jay Powell onto that name too, because they're not very happy that he's there, and that they're going to look for ways to maybe try and manipulate the Fed through that channel.
Jim, the institution has stood up to this. We've talked about this a number of times. We haven't seen inflation expectations become untethered because of this specifically. There is no real evidence in financial markets, at least, of an erosion of central bank independence or perceived independence or credibility. If they did make that move and they were successful, Jim, would the story change?
It could, if because it's one move alone isn't going to define the story. It's going to be what comes after that. If they do raise rates, at the meeting at the end of this month or the meeting in September, what are they going to do after that? I doubt it will be just one rate move, and it will have to be dependent upon the inflation rate and some of the other economic data.
Jim, I mean,
but yeah,
the president was successful in being able to fire someone with the story change.
Yes, I think in that case, the story could definitely change. It all depends on how much of a bar he has to do. Right now, he can't just come in and say, you're fired. He can't do the apprentice thing and throw them out right now. He needs to do something a little bit more of a higher bar, give them a chance to respond, give specific allocations, prove those allegations. So if he gets to that point that he can actually do that, we'll have to judge it whether or not that particular person that was fired deserved it, or whether or not he has, undue power on the Fed.
Jim, appreciate it. As always, buddy. Thank you, Jim Bianco of Bianco Research. You will hear from the Fed Chair, Kevin Warsh, in about 15 minutes' time out of Sintra, Portugal, on a panel at the ECB's big get-together in Sintra, alongside the ECB Chief, Bank of England Governor, and the Governor of the Bank of Canada as well.
Yeah, right now it doesn't seem like there is as much concern, at least in markets, on the political aspects of this. Does Kevin Warsh like what he sees at the long end of the yield curve? Though, I mean, this to me is what I think probably Treasury Secretary Scott Bessent is watching. Watch the 10-minute that he has managed to control significantly with just a bit of job owning.
Bessent would prefer that it was below 450 and not above. And it's below 450 right now, and the curve has flattened somewhat because of that hawkishness at the front end of the curve. So if you're worried about the long end, we've talked about this a number of times. It is achieving that for you.
The irony of this moment is by having more hawkish rhetoric, you've actually eased financial conditions at the long end of the yield curve because rates have gone down. So there is that, and that I'm sure is making the Treasury.
I'm going to suggest that Bessent understands that and maybe others don't in Washington. Possibly.
Maybe. One should say.
All right. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. U.S. negotiators Jared Kushner and Steve Witkoff had positive discussions with regional leaders in Qatar. Sources telling us here at Bloomberg technical talks with Iran are moving forward. No direct talks between the two countries are scheduled. Millions of people across the central and eastern United States are facing dangerous heat this week. Forecasters saying temperatures could reach the low 100s, with many places expected to challenge or break daily records. In sports, LeBron James is leaving the Los Angeles Lakers after 8 years to play his 24th NBA season elsewhere. Golden State is expected to be on his list, along with a return to Cleveland or Miami. And that is your Bloomberg Brief. John.
Bonnie, thank you. Appreciate the update. Up next on the programme, we'll get you some morning calls. Plus, Andrew Honhorst of City's going to join us. He's looking for 25K in a payrolls report tomorrow morning. The appetizer up next with ADP. Mike McKee will break that down in just a moment.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. It's Jeremy Young in Tokyo.
And I'm Heidi Stradbrook here in Sydney where the trading day begins. And we're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks, a redhead across the Bloomberg terminal, Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
We've seen strong earnings across most sectors, and we've seen the markets perform well across most sectors. You're back in an environment with a world of fiscal stimulus and a world where energy prices are coming off. So it's providing a catalyst for other parts of the market to do well. Just broad economy's healthy.
That was Brian Levitt of Invesco on the earnings. Earnings have been tremendous, much better than expected. Data's firming up as well. We'll get some more data in just a moment. Equity futures negative by just 0.2% on the S&P to kick off the second half and Q3 trading. That's the price action. Let's get you some morning calls. First up, Wedbush initiating coverage on SpaceX with an outperform rating and 190 price target, saying it's well positioned to become a major hyperscaler. Your second call from Barclays, cutting its price target on Nike, saying its turnaround is progressing, quote, far slower than expected. A final Goldman initiating coverage on FedEx Freight with a buy rating, seeing longer term potential for the company to raise prices, productivity, and margins. That stock is unchanged in the 3-month period. Let's get you the latest data then. ADP crossing just moments ago. Mike McKee has that for you. Good morning, Mike.
Good morning, John. 98,000 jobs created during the month of June, according to ADP, in the private sector, of course. That is lower than had been anticipated. Economists were looking for about 120,000 after 122 last month. If you look at the breakdown, you're seeing 2,000 jobs in the goods producing area as natural resources and mining lost 5,000 and manufacturing gained 5,000. That left construction jobs up by 2,000 as the goods producing side of it. In service producing jobs, trade and transportation and utilities up 15,000, education and health services 48,000, which is an interesting number because, of course, June is when a lot of teachers are no longer working anymore. Leisure and hospitality, only 2,000 jobs. Now, the Fed has been worried about whether or not we are seeing pay increases as their focus shifts to inflation. And according to the ADP report, those who are staying in their jobs, that pay increases of 4.4%, same as last month, but year over year pay growth for job changers accelerated to 6.6%. So that's something to keep an eye on tomorrow when we get average hourly earnings.
Well, Mike, to your point, thinking of tomorrow and the data we've had so far this week. So job openings were higher than expected. Job cuts this morning, a little bit better, not as bad as some people might be expecting. How does all of this give you a decent picture maybe of what you can expect tomorrow morning?
Well, if you look at all of it as a totality, you can figure maybe about 100,000 would be a reasonable estimate because some of these ancillary indicators have been stronger. Some of them have, like ADP, been a little bit weaker. The question that does come up is, are we having a supply problem or a demand problem for labor? And according to Neela Richardson, who directs the ADP survey, we're having a bit of both. She says supply problems are arising in some industries, and that could hold down the number of people hired, not because companies don't want them, but they find them.
Interesting. Mike, thank you. Michael, looking forward to your coverage tomorrow morning on payrolls Thursday. Looking ahead to that payrolls report, Andrew Hombos of Citi expecting a street low 25K, writing, we would not be surprised by a larger correction following recent stronger months. The labour market remains fragile and is a key factor in our expectations the Fed will still be cutting rates later this year. Andrew joins us now for more. Andrew, good morning. Good morning. The call is getting more contrarian as the weeks go by. Just give me your argument, the core thesis.
The core thesis is that the market has the balance of risk the wrong way around here. We're talking about inflation upside risk. Meanwhile, we have oil prices that have come down dramatically. We have core PCE inflation. A lot of people don't know this yet. Core PCE inflation is probably going to be revised down 20, 30 basis points. On the other hand, we look at the labor market. 3 months of stronger payrolls readings, absolutely. That's part of what the market's pricing when it's thinking about hikes. But when you look at the totality of the labor market data, you still see fragility, you still see weak hiring, and you have a seasonal pattern where that labor market data weakens every summer. It happened in 2024, 2025. I think it happens in 2026.
The committee will deliver price stability. That was a bit of statement at the Fed's last meeting. And a lot of people read that short line and said, it's a hawkish Fed now. They need to get inflation back to target. Why do you see it differently?
That's the Fed's mandate. Of course, the Fed is going to say that you can put a dovish Fed chair in, you can put a hawkish Fed chair in. Any Fed chair is going to say you need to deliver stable prices. That's the mandate. Let's go back to that. I think the statement goes back to that because that is something that everybody can agree on. Now, when you look at that dot plot, you have 9 individuals who think that you need to hike rates to deliver price stability. You have 9 individuals who think you should leave rates alone and maybe even cut rates to deliver price stability. So big differences are going to get you back. In the job first, we were continuing about couple goals for the study to the seasonal pattern of particular. The biggest one was happening with jobless claims. If jobless claims are low, you look at the continuing jobless claims, the additional jobless claims, the level is low, but they're starting to climb from those low levels. That's exactly what we saw get asked. So that was kind of the tip off. We were going to have some numbers and month of data. That's something we saw yesterday in your Gold's data. Every month we got the number of people hired and the number of people that do jobs, either they quit or they laid off. We can subtract those separations from the hires, and that should be enough what it's like. Thanks for the that tells us it's a good thing. Either we're going to get a 8 jobs number or we beat the 2 jobs number. So this upcoming labor market data wages are just, you know, there's no data. See it. So, and at one point you see it and that just elected that's safer in the job storage as to if you look at the factors, so there are the producers and several things. So everyone at once, Those with some polling now and rates that are pretty comparable to where we got that. And we've been sitting downward. So when I still want to hear it, it's like, we have this anything. This is pretty heavy. And that's why when I look at the prices, we look to agree with I would defense getting this something that's not going to fight with the this price. And significant probability is priced in by July, it's priced in by the end of the year. Whenever we look at those numbers, I just don't see that.
So inflation, you have members of the committee talking that they're nervous about services stuff. It's necessary. Yes, others talking about the fact that AI is very expensive and work out. It's probably getting don't feel a cut. And makes this case that feels that way, like some of them, like they're doing different. If you account for that, where the beginning from we might do to avoid talk about that today, right? If I could just push out the timeline and then have to get through the payment around this. Like I was mentioning, for PCE inflation right now, really looking like an outlier to us. That's picked up above 3%. Looks like it's accelerating. If we just look at for PCE inflation, I can see like people are really counter that with more market spread policy. If you take a couple of measures of inflation, let's take 4 PPI, right? The most obvious alternative to PCE. We're forecasting that at 2.4% in August. That would be a rate of inflation that's pretty comparable to what we saw pre-pandemic. It's AI prices, AI related prices, they're getting a bigger weighting for PCE than for CPI. That's part of that methodology change that I was mentioning. NEA is going to adjust for that. They've acknowledged that. I don't think the markets have that set in yet, so that's still big thing still
Welcome. What's up, YouTube? Welcome. Had an extraordinary session yesterday. The pre-market has been a little bit tighter, however, downtrending. And I'll be looking to have another extraordinary session today. It's good stuff. Took a trade yesterday, posted. Winning streak continues, baby. All about making the money. That's all we're here for, right? Making the money. NASDAQ's coming down to 30,215. The S&P is dropping back over here. The S&P is actually a little bit more bullish than the NASDAQ. NASDAQ is maintaining a downtrend. The S&P, not so much. Market on the tech side, at least, is predominantly green. The S&P is predominantly red. Oil down to 68.90. Beautiful 3C bottom like yesterday that we played. Gold is rocket launching in a 4062. I'm gonna wait for a 3C bounce and I'm gonna scalp long on NASDAQ here. Just biding my time. I like it when they dump it quick out of the gate. You know what that means. Stupid score, baby. Stupid score. It's like the offense being on the 1 yard line and fumbling, and Jerome Bettis scoops it up on the 1 and runs it back 99. Give him 6. High volume bottom wick here, 30,170. The bus, yes, sir. Jerome Bettis, absolutely, baby. About the time I stopped watching football when he retired. 30,170, instant 1 minute, 100-point bounce on NASDAQ. Haven't thought about that dude in forever. Dude, that was the time. Late 90s, early 2000s football, baseball, football, golf, everything was just striking on all cylinders in that time frame. And then everything went to crap with politics and nonsense and lattes, apparently. Heinz Ward, yeah. Cordell Stewart, yeah. Or Troy Polamalu with his crazy hair. At the moment, we currently have split buying, call, selling. We have a slightly bearish option chain. Drop them back over. You know the Kansas school and they won Super Bowls last year. Yeah, buddy. What are we doing? What are we doing? I'm just waiting. Big Ben's my guy. Best QB ever to play. I forgot about that guy. Dude, double bottom like up 30,000, 160.
Yeah. Oh, God. Well, oh, wait, no, that's it. I'm short. 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 I'm not going for new low. I'm just going for 80 again. Alright, you can bounce right out of these stairs. Like I can see. Yeah, I bounce it out. Don't do it. That's it. Be my friend. Be my friend. I got a little bit of hard track there. This is a wide range and kind of a dangerous trade. So what I did, since I'm playing with a new strategy on the 1 minute Periscope updates rather than the 10, is I'm taking that profit right there. I opened a prop firm account and I'm going to see how close I can get this to passing on the show in a few hours. We need 1,500 for it. We are from that one trade. Dude, it's fucking knifing without me as soon as I closed it. We're at 220 from one trade on that. I need 1,500 to get this one funded. Dude, look at that. So I took my profit right at my target of 30,180 here on the micro NASDAQ. And the instant they got below it, they rejected it and continued. Oh man, if they take this all the way down to 30,059, I'm gonna be eyeballing flushing. There might be some levels in here. Don't get me wrong, but this light blue and this dark blue were that really big dump day where we dropped like 800 pips. And this is where it ended up ranging in the 600 point range. I don't have any key levels in there. So if anyone in chat is a NASDAQ trader and you have key levels between 30,059, I'm going 29,415. Let me hear them because I don't have that is no man's land for my chart. Long? Oh, you have a massive scrotum. You have massive.
I mean, we're coming into that positive gamma, right?
We are
kind of growing up here, so I'm
we are.
dude. Oh, I thought I got to the ES on accident. I was like,
oh god, you'd be down a lot more than 40.
Yeah, I'm gonna let this one sit a bit. We'll let her sit. All right, there's a little bounce there. Yeah, I'm gonna take. You can see I was chomping at the bit to use that here.
Don't get too giddy and just start punching shit for the point of punching shit.
What I'm doing. I like seeing that positive gamma increase up here. I like seeing that it's kind of decreasing a little bit down there.
It's having trouble bouncing back up. I'm waiting for a cleaner entry than this. This is chasing, and the stop out would be about 40 points, and I don't want to see 40 points of drawdown. We're going to keep an eye on that, though. We're going to be doing a lot of scalping today, folks. We're trying out the new 1 minute Periscope. This updates quite literally every 1 minute. Market maker positioning. Not consumers, not customers. This isn't you and me putting on SPX. This is market maker gamma positioning only. Why am I zoomed in? There we go.
And it's the lowest you can get to.
Yeah, CBOE, I think CBOE has like some crazy expensive proprietary shit. But as far as I know, there isn't any offering from CBOE for lower than that minute time. So this is the lowest you can get. And I'm gonna be real with y'all. I don't usually say shit like this because it's like lame. And do the comparison shit. But you're gonna be hard pressed. And by hard pressed, I mean it probably doesn't exist to find a more affordable access to one. I think most competitors are sitting at like 200 plus. And right now, until July 6th, baby, you can get this shit for cheap as hell. As low as 92 a month for your first year if you only just get the retail max tier.
for the platform. But not only that, if you're somebody with a big brain or you like the vibe code, you can bundle together the basic platform alongside the API class. Oh, dude, I can't. Oh my God. You can bundle together the API basic along with Retail Max and still get access to the 1 minute pairs